Chinese stocks rose today, thanks in part to changes in its securities laws, making it easier for companies vying to go public. Mainland bourses all soaring by around 1% in trade today. China's blue chip index, the CSI 300, that was the biggest gainer with nearly 1.5% in gains. That is its highest close since April. Let's take a closer look at the revisions to the securities law, shall we, that have been approved by China's top legislature over the weekend. State media have called it a milestone in China's capital market reform. The main idea, less red tape, lower costs for companies vying to go public, and the revised law takes effect March the 1st. Now, with the revisions, China will adopt registration-based IPOs. Now, that means that firms no longer need approval from China's Securities Regulatory Commission to list. That's similar to the United States NASDAQ. Instead, stock exchanges are authorized to review IPO applications. The system will be piloted on Shanghai's so-called Star Market, and that is short for the Science and Technology Innovation Board, the so-called Star Market that was launched in June. Companies also don't need to be profitable before listing. Another revision to the securities law offers better protection for companies and investors. There are now dispute resolution mechanisms to address shareholder grievances, as well as to improve transparency. The maximum price to pay for making false statements or perhaps withholding information from shareholders, well, it will now be nearly $3 million. That's a surge from the current cap of $86,000 as a fine. There are also more rules against insider trading. That's a big one. Individuals found guilty will be fined between $143,000 and $1.43 million. Employees in the securities industry, including regulators and brokerages, they are also now banned from stock trading. Brokerages rallied on the news of that today. CITIC Securities Co. headed for its highest close in 8 months, up nearly 10% in trade. Now, for more, let's speak with Jiahe Chen. He is Chief Investment Officer from Novem Arcae Technologies. How far do you expect these measures to go in encouraging more startups to list?
Well, I think for the main board of the stock market, it's not too much for the startups because they're actually too small to get listed on the main board. Currently, China has less than 4,000 listed companies for such a huge economy. Even this criteria of listing is getting lower, but they are not really for startups. But for the OTC market, maybe there is more chances. I mean, currently, it's just being reduced of the entrance level for investors from 5 million RMB to 1 million. As long as you have 1 million RMB, you can enter the OTC market. And OTC is really a place for startups.
Jiahe, wouldn't this expose investors to more risk, ironically?
Definitely, there will be more risks, but you know, there is no risk, there is no marketization, and this marketization program has been on the Chinese government's list for a long period of time, and it is actually now the chance to do this marketization. At the time when China's market was started in the early 1990s, China only had some retail investors. There were no experienced investors at all. But now, 30 years later, Chinese market has something like 120 mutual funds, 8,000 hedge funds, 100 insurance asset management companies. It's really time to, bring risks to the investors and let them make their own choices.
Well, part of that would be to look at the profitability of a company as well. That's also a risk that investors take. Continuous profitability, that's not a criteria now. Again, wouldn't that expose investors to the risk of subscribing to IPOs of companies that aren't even profitable yet?
Definitely, there will be risks. When you are doing things in stock market, you're not betting on one stock. Like our fund, we have something like 38 holdings. So, some of the companies will definitely go south. But that's not a problem. This is actually, this new criteria is set for the tech companies. When you look at companies such as Google, Baidu, Sina, they didn't have much profit at the time of their listing. So China is really changing this law to fit in the global trend.
All right, but local reports are saying that the revised law includes stronger protection for investors. How is this going to play out in reality?
You're actually talking about the Article 95 of the securities law. There are a few things saying how this will be conducted in reality. When there are enough people, they can select a representative to take the suit. Also, with the same suit, the court can ask for others to register. If this registration requirement is not refused, it is considered as they have already registered. And the same judgment will apply to everyone who actually attended this registration. Also, the Investor Protection Agency can represent investors to make the suit. So it's all these things. Actually, it's pretty new to China. It was never here before.
Mm-hmm. And speaking of that, safeguards are also always important in the security sector. Will the new higher penalties for illegal activities in the sector be effective enough, do you think?
It's definitely yes. I mean, China has actually changed a lot. Back in the time of 2000, before the first securities law actually came out, there was no law for 10 years. For the whole 1990s, there was no law in China for the securities market. And later on in 2000, we had the first law. Now it's 19 years later, there are approximately 300 or 400 regulations, laws, things like that. So yes, I mean, this market is actually becoming more and more legalized.
Jiahe, thank you very much for sharing your perspectives with us this evening. I was speaking there to Jiahe Chen. He's Chief Investment Officer from Novem Arcae Technologies.